Microsoft and Meta just went on a mega capex spree, and SMCI, Super Microcomputer, is along for the ride. On the Thursday after their earnings, Microsoft announced it will plow $80 billion into fiscal 2025, primarily into AI data centers and infrastructure. Meta chimed in by boosting its 2025 capital expenditure forecast up to $64 to $72 billion, about $7 billion more than before, again to ramp up AI-ready data centers. SMCI's stock jumped 4.9% by 2:11 p.m. Eastern Time, earlier hitting plus 5.2%, riding this AI spending wave. The broader market was also up. The Nasdaq Composite was green that day, but SMCI's move screams, AI, at us. Why is this a huge deal for SMCI? Because Super Micro builds the very hardware these AI projects need. The company sells high-performance, liquid-cooled servers designed for GPUs and AI workloads. Its AI-focused gear is already a big revenue driver. In Q2 2025, over 70% of SMCI's sales came from AI-related products, with revenue jumping 54% year-over-year to $5.6 billion. SMCI even boasts cutting-edge liquid cooling tech and rack systems tuned for the latest NVIDIA GPUs, like the new Blackwell chips, exactly what hyperscale data centers crave. In short, every extra dollar Microsoft or Meta pour into AI data centers could mean new SMCI server orders. That's why SMCI is often called an AI server maker and a big winner of the AI boom. Reuters noted SMCI had emerged as one of the biggest winners of the AI trade. When cloud and tech giants announce massive AI spending, investors figure SMCI, a small fish in a big AI ocean, might get splashed by that money. Hence the stock's sharp bounce on the news. SMCI's earnings roller coaster. It hasn't all been smooth sailing for SMCI, though. Just a few days earlier SMCI had delivered some sobering news. After a stellar Q2, management slashed guidance for Q3, ending March 2025, saying revenue would be only $4.5 to $4.6 billion instead of the previous $5 to $6 billion range. The culprit? Delayed customer platform decisions, meaning big buyers held off on orders. Wall Street panicked, shares plunged 16.7% overnight. This volatility shows the tension, explosive AI demand and execution risks live side by side for SMCI. To be fair, SMCI got its housekeeping in order recently. In early 2025 it filed overdue reports, regaining Nasdaq compliance after a scare. But investors still worry. The company faced accounting questions, had to possibly replace its auditor, and very nearly got delisted. All that drama made some clients skittish. SMCI's stock drop was more self-inflicted missteps than a sign AI was slowing. Still, the underlying momentum is undeniable. SMCI's current fiscal year targets are eye-popping. Management projects about 65-70% plus revenue growth, from $24.9 billion in FY 2025 to $40 billion in FY 2026. Analysts also note SMCI's balance sheet is solid, high return on capital and an Altman Z-score that suggests low bankruptcy risk. In Q2 SMCI actually delivered record revenue, helped by AI systems. It's just that the setback in Q3 reminded everyone that this is a high beta stock, big moves up and down. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Battling the big boys, Dell and HPE. SMCI isn't alone in the AI server game. Dell Technologies and Hewlett-Packard Enterprise, HPE, are also furiously selling AI hardware to the same customers. In fact, Dell saw $1.7 billion in AI system sales in one recent quarter, a 10x leap year-over-year, and HPE pulled in nearly $900 million in AI servers. Even so, both warned their profit margins took a hit as they scrambled to supply GPUs and other expensive components. In practice, SMCI's competitors mean a margin squeeze. Analysts note that as Dell and HPE ramp up production, pricing on AI servers will stay tight. They're high-volume, diversified players. SMCI is smaller and more specialized, so any oversupply or pricing pressure from big players could hurt SMCI's profits. After SMCI's recent guidance cut, Dell's stock even dipped 4.6% and HPE fell 1.5%. Some market watchers think troubled customers might shift orders from SMCI to these sure-thing vendors. So SMCI investors should watch Dell/HPE moves closely. On the flip side, SMCI is lean and laser-focused on AI. Dell/HPE have lots of other businesses. SMCI's liquid-cooled, GPU-optimized niche may keep it winning certain hyperscale contracts. But for now, analysts list competition from Dell and HPE as a top risk for SMCI. What the analysts say. Wall Street is a mixed bag on SMCI. The consensus is a hold or lukewarm rating. Out of 18 analysts tracked by MarketBeat, 10 rated SMCI a hold and only 6 said buy. The average 12-month price target is around $48.70, implying roughly 49% upside from today's $33 price. So many analysts think the stock could go higher if everything goes right. Indeed, some experts are quite bullish. Rosenblatt Securities, a noted AI bull on SMCI, reiterated a buy rating and $55 target, and Needham also sings SMCI's praises, citing its AI structural growth and liquid cooling leadership. They basically argue, AI spending is here to stay, SMCI's execution will improve, and the stock will reward investors accordingly. Others are more cautious. JP Morgan and Mizuho, for example, warn about margin erosion and all the operational hiccups. They point to rising costs, inventory write-downs, and SMCI's sheer volatility as reasons to sit tight or even step aside. One fund manager colorfully noted that SMCI's recent stumble looked self-inflicted more than anything. At this moment, it's a tug-of-war. Bulls see a huge AI tailwind and a once-in-a-decade growth story, while bears see execution risk, accounting issues, and competitors nipping at its heels. What should SMCI shareholders do? So, are you Team SMCI or Team Caution? Given the uncertainty, the safest stance is probably proceed with eyes wide open. On one hand, SMCI is riding the AI tiger, and that tiger is huge right now. The recent spurt in spending by Microsoft, Meta, and others like Amazon/Google, is like adding more barrels of fuel to SMCI's rocket. If the AI boom truly takes off, SMCI could finally deliver on its sky-high growth goals. On the other hand, remember that SMCI is volatile. In the last quarter its stock went from sky-high on good news to tanking on bad news. It's wise to not bet the farm on it alone. As one analyst put it, investors should weigh the consistent growth in technology, a foundation for optimism, against SMCI's underlying issues like delayed filings and missed expectations. In practice, that means maybe treat SMCI as a high-growth, high-risk position, allocate only what you're ready to see bounce around, and keep cash handy in case a better entry point or signal comes. Some long-term investors might nibble a bit more if they believe the AI supercycle is just starting. Others might want to wait for SMCI's next earnings. May 6th conference call is scheduled, to see if guidance stabilizes. There's no one-size-fits-all answer, but diversification and not ignoring fundamentals are key. After all, even if Microsoft and Meta are spending like mad, there's no guarantee all that spending flows 100% to SMCI. Remember, the revenue road ultimately depends on actual orders and how well SMCI executes. Generative AI, the hype versus the reality. Finally, a meta question: is all this AI data center spending justified by real-world uses? Or is it just a fever dream? Let's put on our futuristic goggles for a moment. Generative AI, think ChatGPT, image generators, code-writing bots, is already slurping up huge computing power. Gartner figures even expect generative AI to account for 10% of all data created by 2025, that's massive. And what is that data? Thousands of hours of customer service transcripts, code, design files, scientific simulations, everything from automated ad campaigns to drug discovery pipelines. Fear God, and give glory to Him, for the hour of His judgment is come, and worship Him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey His law. For His commandments are sure and His word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.